Hey, this is Matt from InvestiQuant. Today is Thursday, December 17th, 2020, and today we are going to continue on with another seasonality-like market event-like study like we've been doing all week. And today, the one we're going to be looking at is what has happened historically the day before options expiration day. So we've got options expiration tomorrow. Today is the day before. We're in a bullish market environment, and the market is trading higher ahead of the open. So let's set that up and look at that study. We're going to be looking at all four instruments. The setup we're going to be looking at is entering at the open as a long. So that's an entry at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. For the opening filters, I'm going to select gap up, which just means we're going to be opening above the prior day close for this study. Next, I'm going to go into indicators, and I'm going to put us in a similar environment. We are up at all-time high territory, but I'm going to put us above a 10 and 200-day simple moving average, which will put us in a bullish environment. And then I'm going to go into market events, and I'm going to say that today is the day before options expiration. That comes from this day before market events category here within the market events library, or I can just grab it right here from the active today. It's the top option, so that's easy to click on. Now I can click view results. All right, here we go. So these are the results of going long at 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you are opening above the prior day closing price on the day before options expiration day, when in a bullish environment, which I've defined as above a 10 and 200-day simple moving average. Historically, the S&P has 56 samples dating back to 2003. The NASDAQ has 52, the Dow 57, the Russell 48. If we look at the win rates, the S&P, 61% of these have closed above the opening print for that day. The NASDAQ dead even at 50-50. The Dow is the strongest of the group. 68% of these have closed above the open on this day. And then the Russell just slightly better than 50-50 at 54% of these have closed above the open. So S&P and Dow have both had a little bit stronger win rates on this day than the others. If we take a look at the average win to average loss, the average loss is a good amount larger than the average win for the S&P. The NASDAQ, the average win is larger than the average loss. The Dow, the average loss, quite a bit larger than the average win. And the Russell, pretty similar sizes for an average win to average loss. So if we look at the win rates on all of these, they do skew a little bit more towards the favored side. But the ones that are strongest, the S&P and the Dow, both have larger average losses compared to average wins when they have been right. So even though they've been right more often than they've been wrong, when they have been wrong, they have lost more on average than what they made when they were right. So hopefully you found that helpful. Good luck today, and we'll see you next time.